this computer. Okay, so now we're recording this presentation, which again is 9 tips to improve your trading, but we're really talking about tips and tools. So the first one that I wanted to share with you is, let me get my chat back. My chat disappeared on me. There we go. Okay, give me just give me another one real quick. If you can see the, I've got a spreadsheet that's up. Perfect. Okay, so first thing, this spreadsheet. So I know, and again, we're going to start off by talking about the funded account, just because that we do have 26 more minutes in the market. And while the market is active, I want to show you a tool. But first, I want to start with this spreadsheet. So I created this myself. I don't know if any of you are using this, but I know the funded account is kind of unique because it's not like you're using quantity 300 for your shares, right? So it's a whole different thing, and you have to do it in a decimal system, move the decimal 2 points, blah, blah, blah. So anyway, what I've done is I've created this spreadsheet. And what this spreadsheet does for me is I can simply put in my entry, put in my stop. It tells me for the funded account what that lot size is going to be. So 1.51 here, 0.5 here. Then I'm sorry, that's down here. This is the delta. That's the difference between your entry and your stop. Down here under shares, this is telling me the lot size, 3.31 here, 10 here. Currently, I'm using a $500 R on the funded account. But what I've done is I've added down here is I've added these targets. So this just is a quick reference. All I have to do is plug in my entry, my stop. It tells me what the difference is between that. It tells me what my lot size is. And then down here, it tells me what my targets are. Now, I have to copy these ones over here. I actually ended up extending this and adding in a 4R, 5R. But anyway, this tells me immediately, very quickly, what my 1R target is, my 1.2, 1.4. So curious, is anybody using something like this? Give me a 1 if you have something like this or if you're using something similar. Joe, perfect. Okay, give me a 2 if you do not have something like this. Okay, couple people. Okay, so I'm going to here. I use a portion tool in TradingView. Yep, so I'm using position tool, TradingView. Okay, so any of you who might want this spreadsheet, I'm putting my email address in the chat. Okay, so my email, Steven@reallifetrading.com. If anybody wants a version of this spreadsheet, I'm happy to send it to you. Again, all you have to do is, like if I were putting in a trade now and I, just run you through it. If I said, my trade is going to be, let's see, 133.5, and I'm going to be going long. So my stop is going to be let's say 131.35, whatever. I'm just making this up. Okay. So that tells me right away what my delta is, which is again, the difference between my entry and my stop, how many shares, meaning the lot size that you're going to use. And then again, generates my 1R, 1.2, 1.4, 2R target. So I'm going to show you how that's helpful for me in a second, and how I use this. So I use it in conjunction with something called Risk Calculator, which I'm going to show you in a second. But again, just shoot me an email. I'll wait until I receive everybody's emails, and then I'll just send it out to the whole group. So whoever wants this, just let me know. Happy to share it with you. It's a straightforward spreadsheet, but it's super helpful. Okay, so I use this in conjunction with risk calculator. Now let me change my share and we will, Vaughn, scroll up in your chat, go up just a couple messages above your question. It's Steven@reallifetrading.com. It's in the chat. Oh, you know what? My bad. My bad. You know what I did? I posted it to hosts and panelists. All right. Paste. There we go. Now it's to everybody. Sorry about that. Okay. Got it. Luis, thank you for posting that. Yeah. So Steven@reallifetrading.com. Just shoot me the email. I'll share that with you. All right. So I use that spreadsheet in conjunction with this, which is called the risk calculator. Okay. So my funded account I have connected to this is MetaTrader 5. And within, so is anybody else using MetaTrader? So give me a 1 if you're using MetaTrader. Tony is, yep. So those of you who are not familiar, you can connect your 8cap to MetaTrader. And then what I have here is this is the risk calculator app. And I'm going to put in here, the website is just, and we'll go there in a second, but risk. That is the website, riskcalculator.app. I didn't realize that there was an actual .app extension. I thought, it would be like riskcalculator.com. Yeah, Tony's saying that MetaTrader is much better than ACAP. Yeah, I like this very much. So anyway, so riskcalculator.app. And what this does is this is just an app that you connect to MetaTrader, and you can modify the settings. So your risk percent. Okay, so I have a $200,000 account. So my risk percent should actually be 26, or 25. But what you do is you put up there, and that is you put in your percent of the account that you want to risk. So I'm using, there's 2 different ways you can do it. You can put in the percent of it. So I've, again, $200,000 account, or you can just override that and just put in a cash risk. So that's what I've done. I just go in and I just modify and I put in my cash risk, which again is a $500 R, which again, that goes with the spreadsheet that I showed you just a second ago. But what you can do here, this is pretty cool. So under settings, you can go into settings here and you can modify each of these buttons. So all of these buttons have a different function. So close half is pretty straightforward. You can close half your position. Close custom, okay? So what I've done here is close custom. I can just take a 10% partial. That's what that does. So I can just, click that button and that will take off 10% of my position wherever I am. So, and super fast and easy to do. Then this one, this partial, this one right here, okay, partial take profit. What I've done is I've set that to 90%. So I'm going to show you how I've been using this. So I have that set to 90%. So for whatever reason up here, you put in the whole number 10 and it's a percent, but down here, it's still a percent, but you just put in the decimal. So 90% is 0.9. I put that in here. Then you also have this button here, which is when you are in the trade, you can just say, this is move stop to break even. So you can just hit that and boom, your stop will get sent to break even when you're in the trade, and that happens immediately. But the cool thing I like this is, so let's say we're looking at Amazon right now, and let's say I'm, this is the 10 EMA, right? So technically we have a 10 EMA trade, right? Kind of, right? Didn't close above it actually, but let's just assume for this demonstration's sake that this is in play, okay, that this qualified. So what I would do is I would hit pending order, okay, and if you notice right away that drops in 3 lines. I've got a green line up here, that's my profit line, my entry, my stop, does it automatically. Now I can do a couple things. I can drag this wherever I want it, okay, so if I want it there and then I want my stop, down here. I can do that. Now, what I do now is I go into I use my spreadsheet that I just showed you. And let's say if I look at this candle, and again, I'm not using this for charting. I still use my Thinkorswim for charting. But let's say I you know, the high of this candle is whatever it is. See if I can actually get it. That's the. Does anybody else have trouble sometimes getting the high and low off this? Like if I hover over this one, it's giving it to me. But if I go over to this one, it's not. But anyway, what I use Thinkorswim for charting. So I would actually pull my exact numbers off of Thinkorswim. But let's just say for argument's sake that this entry, if I hover over here, is 123.58. So if I put that in my my spreadsheet, 123.58, that's going to be my entry, right? 123.58. Go back over here, 123.58. Let's just call it that. And let's say my stop is going to be down here, 122. Maybe I'll make this 70. Okay. Again, this is just for demonstration purposes. So 122.78. All right. So if that's my entry and that's my stop, that spreadsheet is automatically generating my targets for me. So I have my entry here, 123. Make that 58. And then again, see how it just moved my stop line. I would have to go in there and modify that just because I want it at 122.78. Okay. So if I were to go ahead and if you notice this green line up here, okay, this green line, which is my profit line, is being taken from this line over here called ratio. So ratio is really just what you want your target to be. Now, I have it at 3, and I'm going to explain why I'm doing that versus you could just have that at 1.2. Now, and again, with the 10 EMA strategy, 1.2 is what we're targeting. But my philosophy is if I hit 1.2, what I've been doing is I want to take off 90% of the trade, and I want to hold on to the remaining 10% of that trade and see how far it can run. So what I've done is I've automatically set my target up for a 3R target. So what happens is, let's say if I get triggered in this trade, my ultimate target is 3R. But what I can do is once I'm in this trade, I can click this button here, take partial, and it's going to drop in a partial somewhere up in here. And then what I do is I manually go in. I can just let's say this is the partial line. I can just right click on it and I can go into properties and I can change it to whatever value I want. But I would then look at my spreadsheet, and I know that based on my entry and my stop, my spreadsheet is giving me a target of 124.54. Okay. So let's just say for argument's sake that this becomes my 124.54. That's 2R. So just for demonstration purposes, let's say I hit this, I would say I'm in the trade, and I hit this take partial button here. So that's going to drop in this partial. And so when it hits that 1.2 target, it is then going to take off 90% of my trade, because again, I have in my settings here, I have my take partial set at 90%. It's going to, instead of closing out my entire position, it's going to take off 90% of the trade. And then at that point, I can let the remaining 10% run just to see how far it can go. Because, sometimes you'll hit your well, let me ask. So how many times, people here, in the chat, how many times do you hit your target, you exit everything, and all of a sudden, 5 minutes later, 10 minutes later, you're watching it, it just keeps running. Give me a 1 in the chat if that's happened to you. And then you go, well, maybe I should have, yep, Tony, all the time. Maybe I should have, held out for more. So this way you can, I call them holding on to some runners. If you hold on to some runners, you let it go for as far as it can go. And at that point, you can, once you hit that 2R target, or I'm sorry, the 1.2 target here, you can tighten up your stop. And then what I like to do is at that point, use a 2-bar trailing stop. So once I've hit that 1.2 target, and now I'm letting it run for as far as it can go, then it goes, okay, well, where are you going to have your stop? And all I do is I just use a 2-bar trailing stop, which means if I were to use this for an example, let's say I got into this trade down here, right? And then let's say I entered a trade here and this was my target. And once I hit my 1.2 target, and let's say this was my 3R target, once I started making a series of higher highs and higher lows, I just trail the stop by 2 candles. So let's just jump over to here. Let's say this candle here is, let's say, once it starts breaking high and breaks this high here, I've already hit my 1.2 here. I obviously don't want it coming back down, and I don't want to lose money here. So I could move my stop below this candle here. And as price moves up, as long as it's making a series of higher highs and higher lows, I just count back 2 candles and put my stop there. So let's just grab this candle, for instance. On this candle here, now that would have hit that, let's say if that was the 3R target, would have hit it. But let's say this candle here, this made a higher high and a higher low than this candle. So all I do is count back 2 candles, 1, 2, and I move my stop here, right? Then this candle forms. That made a higher high and a higher low compared to the one before it, preceding it. So count back 2 candles, 1, 2. I put my stop here. So that's how I'll move my stop. Once I hit that 1.2 level and I'm going for as much as I can get, that I'll just use that 2-bar trailing stop and ride it for as far as it can go. And at some point it might, come back down and take me out. But still, that gives me an opportunity to capture as much profit as possible. So real quick, any questions on that? Is anybody else here? Give me a 1. Is anybody else using the risk calculator? Anybody in the chat? Anybody who's here? Okay, Tony said he's going to be soon. Yeah. If you all are familiar with Brian Davis, so Brian Davis, who's been crushing it. He's not here now. I think he's probably might be. Well, I don't know if he's working. But anyway, so Brian, is now using the risk calculator. He loves it. So it's a pretty cool tool. Let me pull this up. Can everybody see my, give me a 1 if you can see my web page here. Perfect. Cool. So this is it. Riskcalculator.app. Okay. You just go here, click buy now. Now, see this, don't let's fool you. There's premium and then there's standard. It gives you this has been on sale for as long as I've, from the very first day that I went to this website. So the premium is always $9.99. It's a reoccurring charge. So it's a monthly fee, but for $10 to have that kind of functionality, I really like it. So I think it's well worth the $10 a month for that. So, but anyway, that's the risk calculator. Any questions? Anybody have any questions on it? No questions. Let's see. How many people do we have here? We have 44 people. Kyle, what's in your favorite beer folder? That's a good question. Beer. Let's just see. There's a few things in there. Huh. If you want to go to fantasy football, all kinds of good stuff. All right. So no questions on the risk calculator app. Okay. But anyway, I would highly recommend, if you're using MetaTrader 5, it is a great tool. And again, use that in conjunction with that spreadsheet, because that spreadsheet will give you your targets. You just have to just enter in the, again, enter your entry and your stop, just those two numbers. Spreadsheet does the rest. And then you can use that to throw in your targets into MetaTrader 5 using the risk calculator. All right, let me close this down. Let me now go to a different share. Let me move this over here. Okay. Let me just make a note here, taking this off my list. Okay. Next tip. Okay, so that was a combination of tools and tips. So this is just my next tip for you, which is when you're trading. So how many of you here, give me one, or give me, better yet, yeah, give me one in the chat if you currently do not watch the broader markets when you're trading. Okay, so is everybody then is you? Okay, so give me a 2 if you are using watching the broader markets when you trade. Okay, so good. All right, so maybe this is not a tip that then anybody is going to benefit from, but I'll just show you real quick. If you've been with me when I've been moderating the room, I often show this. So I always have a screen up right here where I am watching the broader markets. And so I have the futures here, okay, on a daily chart. I've got my S&P, I've got my NASDAQ here on the daily. I tend to watch the futures. Again, the SPY and the Qs are just the futures, but in an ETF. So I tend to watch the futures myself. This is on a 5-minute chart. But again, the SPY on a 5-minute chart should look identical to the ES. And all I'm watching, I'm not so much watching the price levels as much as I am just the price action, meaning the candles, right? So I'm not really paying attention to the actual numbers over here as much as I am just watching the price action of the candles. So I'm always keeping an eye on the broader markets because they're going to respond. They're going to, look, we're talking could be, nanoseconds, but Tony, I'm not sure, maybe somebody else here who is uses, so I use Thinkorswim for my charting. Maybe somebody else here who is on TradingView, but yes, I believe so. My /ES is the S&P 500 E-mini future. So yes, that should be the same as if ES1 on TradingView is the S&P 500, then that should be the same. Yeah, it's a little different. Thinkorswim uses a different ticker symbol for it. But anyway, so I'm always watching the broader markets because as I'm setting up for a trade, getting in, once I'm in a trade, I'm always watching to see, because this might happen just could be nanoseconds, could be milliseconds, but typically you're going to see the broader market start to make a move, and then the stocks are going to follow, right? And again, it could be almost simultaneously, but in general, this is going to give me, if I'm getting into a trade and I see the broader markets and they really start to make a move, especially if it's going in the opposite direction of where my trade is, I'm going to pay attention. But then along with that, okay, along with the watching the broader markets, is paying attention to these volume spikes, right? And a couple of great examples right here. So when we were in this kind of, when Jeremy was talking previously about this we were really just in a channel, right? All of this price action here was just in some choppy channel here, right? Even though we kind of got above it a little bit here, below it here, but still we're just in this channel. But then all of a sudden, if you were to have drawn channel lines here, right? So if you just had, some horizontal lines here, once the markets started to break and get out of that channel, look at the volume spike here and the volume spike here, right? So in addition to watching the price action on the broader markets, pay attention to the volume spikes, right? Because they're going to really show you, so all through here, we were just in a, sorry, give me a second. So this period of trading here, right? So all through here, right? So we made a high here, but then we came back down. But all of this right here, just trading within a channel, just chop, right? And I got chopped around. I was trying to, I was in a short and, and just getting, there's the markets, 4 o'clock. Okay. Markets are done. So anyway, just chopping around within this channel. But then you get this candle that comes in, and big candle breaks through that channel, closes strong, but look at the volume spike, right? So that is, again, another indication, like when you see that kind of a volume spike, that breakout should hold. And if you were looking at that, and again, this is the futures, but this would holds true for any ticker or if it's SPY, but you see that volume spike, right? This volume spike, if you look left, look how big that volume is compared to everything else today, right? Massive volume spike, big candle. Well, let's say you miss that, right? You're not anticipating a breakout, you don't get into it. All you do is just set up a limit buy off of the breakout line, right? This channel line right here. Just let that form, let that close, let that give you the confirmation with the close, throw in a limit buy down here off the line, stop somewhere down here, because typically breakouts do retest the breakout level. So it breaks out, comes back, retests. But same thing here, right? You got the same kind of volume spike. So I'm always paying attention to the broader markets, watching that price action. I'm looking for the volume spikes. There was another one. You got another. So this volume spike was when it broke out of the channel. You got this other volume spike here, right? Now that's really close to the end of the day. But let's say if it wasn't close to the end of the day, that volume spike right there is, and there was another one here, right? So here was the volume spike. We got another one here up near here, but if that was like midday and I saw that volume spike, again, that would be something that would make me start to take notice, because it's double topping, right? So let's say, again, let's assume for a second, this is not the end of the day, but you get this candle here that double tops with that kind of volume. That typically to me is a signal that price is about to retrace, right? So that could be exhaustion buying, capitulation, whatever you want to call it, but there's your exhaustion buying. So double top, that kind of volume spike, right? Again, look how big that volume is compared to even this one where the breakout occurred. I would expect that to then that would be my reversal signal. So pay attention to the volume spikes while you're watching the broader market. All right, so I wanted to touch on those while the market was open, right? So now, because there were some other things that the list I put together, some of the things are, kind of normally I would build on and get there, but I wanted to address those things while the market was still open, so that you could see that risk calculator live while the market was going. All right, so in terms of Vaughn, I don't trade futures, but I am watching because again, most, 99.9% of the stocks, right? Depending, unless there's some other type of a catalyst, the stocks are going to follow the broader markets. So if I start seeing some type of a volume spike in the broader markets, that will, and then I'm expecting the broader markets to, like, again, in this example here, where, just want to make sure you're still looking at, you're still looking at the broader markets. In that example that I was giving here, if I was in a trade, let's say I was in a trade on Amazon, and I was going long, and all of a sudden I saw the broader markets making this double top with that kind of volume spike, and I'm expecting the broader markets to reverse, well, likely my Amazon trade would start to go in the opposite. If I'm going long, if I'm going bearish, it would likely start going in the opposite direction, because it would follow the broader market. So that's why I pay attention to the volume spikes. I'm watching for volume spikes in the broader markets. I'm also looking for the volume spikes, in the trades that I'm in. So the individual. So I'm always keeping an eye. Let me show you. Let me pull up just another screen real quick. So just to give you a sense for. Now, I'm doing this right now. I'm at the cottage, so I'm doing this off of. I have a laptop, and I have 2 portable screens. So it's not as great a setup as what I use when I'm home, where I have a bunch of real estate and much bigger screens, and it's much easier to I can the charts are even are bigger than what we're looking at here, but this would be a typical view of, like, you should right now, give me one, you should be able to see Tesla, Nvidia, Amazon. You see all those? Okay. So normally let's say if I am watching these tickers here, so, majority of these are the 10 EMA tickers. But if I'm watching these, I have this screen up, and then the broader markets, the one that you were just looking at, is just immediately to the left of this screen. So this screen that you're looking at right now is my laptop screen, the way I've got it configured here at the cottage. But that's my laptop screen. Immediately to the left, I have the broader markets. So I'm always have those up at the same time. And then the final screen, I have 3 here. And at home, I have, what do I have at home? I have 1, 2, 4, 6 that I use during the day. But so I'm down to half the screens at the cottage, plus they're smaller, but you make it work. But then the other screen that I have, and this will lead into my next topic. So right now you should see just a screen of SPY, and there's just a 3-minute and a daily chart. Does everyone see that? Give me one if you're, just make sure that you're seeing the right screen. Thanks. Okay. Yep. So this is immediately to the right of my laptop, and this is the screen where I will pull up the individual charts. And that leads me into my next point, is using multi-time frame analysis. So give me a 1 in the chart if you are currently using multi-time frame analysis. Cool. A couple of you. Okay. All right. Give me a 2, not to put you on the spot, but give me a 2 if you are not using Kyle sometimes. Okay. Kyle, shame on you, Kyle. Come on. You know better. I'm giving Kyle a hard time. He's been with me in a mentorship group. Give me a 2 aside from Kyle if you are currently not using multi-time frame analysis. Do I have any 2s? All right. Well, I'm going to assume that there are a few people here who are not using multi-time frame analysis, but let me show you how I use it and what I'm doing. So, couple things, and this is going to cover a couple of the other tips and tools, because they all kind of overlap once we're into this. So first thing, okay, is this is my this is a daily chart and it's my 3-minute. Okay. So when I first am pulling up, and let me change this to a 5, because let's say right when the day is beginning, okay, immediately as the day is beginning, and I've got we're pre-market, let's say it's 8:30 in the morning, 8:45 in the morning, whatever it is. I pull this up. I have, the pre-market action, it shows up. I've got my daily chart. Okay. Now let's say when I'm trading the 10 EMA tickers, like we all know who those, what those tickers are. We also all know that those are companies that have that move, right? That move each day. But let's say I'm pulling up just my my gap scanner, and I am looking for gaps, and I come across some tickers that I'm not that familiar with, and then I'm not 100% sure, what if they move or not. So what this is, I'll first have my 5-minute chart up here with the pre-market on. I have my daily. So if I'm just going to randomly just go to like X, okay? Pull up X, US Steel. And I can look at this, and on the daily chart, right, I can obviously see where pre-market, it would have been showing me where, price action was in relationship to the previous day. But I also have up here, if you notice, see here, I've got the ATR and the ADR that show up here. So at a glance, so these are just scripts. Okay. So any of you who are using Thinkorswim, there's a ton of scripts out there. You can build your own, create your own scripts. If you just Google certain scripts, you can import these scripts into Thinkorswim and add them to your charts. So here on this chart, you can see I have my average true range, and then I have my average daily range. Okay. And they're slightly different, but I can quickly look at this and I go, and the way that my average true range works. So my rules per my trading plan, I have my rules say that I'm looking to trade tickers that have an average true range. And I'm going to talk about the difference between these two, but tickers have an average true range of 80 cents or more. Now, does that mean I won't trade something that has an ATR of 50 cents? No. Does that mean I won't trade something that has an ATR of 30 cents? Yes. So 50 cents is kind of my bare minimum average true range. And what the average true range is how much you can expect that stock to move. It's its average. Well, this is over 14 days. Let me just pull this up real quick. So average true range. Okay. So it's a 14-day period. Okay. And it's how much on average over those 14 days that the stock moves per day. Now, that takes into account gaps. It takes into account several factors, but the difference between these is this is a period of 14 days. And again, it takes into account the gaps. Average daily range is, so ATR is I use it to qualify stocks for day trading, but it's actually better suited for swing trading than intraday. But again, I'm using it for intraday trading as a qualifier. So right away, I know looking at this, let me try to come up with a ticker that is, hang on, I'll come up with something. I'm striking out. I'm trying to think of something that's got a, oh, I know. Okay, so here we go. AT&T. If I were to look, let's say AT&T shows up in my gap scanner. I pull this up, and right away I see it has an ATR of 30 cents. I'm not trading that, right? So that's how I'm using my ATR on, as a qualifier, right? So reason I have that on my chart, if I'm day trading, is that is my qualifier. I will look at that ATR, and if it's below 50, that's immediately off my list. I'm not going to trade that, because how much is, something's got to make a huge move. If something has an ATR of 20 cents or 30 cents, it's got to make a huge move during the day. So I don't want to waste my time trading that. So that's how I'm using the ATR portion of it. When in the morning, when I'm looking at my gaps, I want to make sure that whatever I am looking to trade that has a minimum ATR, ideally 80 cents minimum, but I will consider something that has like a 50 cent ATR. Let's go. So Visa, you can see, yes, it has an ATR 4.6. Okay. I meant to put in VZ, Verizon. Okay. So let's look at Verizon again. So Verizon has an ATR of 80 cents. So, okay, great. That meets my criteria, right? So let's say if I'm, all right, Cindy, take care. Have a great weekend. Let's say I'm looking at trading maybe AT&T is what popped up on my scanner, but it doesn't have the ATR that I want. Well, within the same sector, right? Because sometimes there's sympathy plays, right? So if AT&T, let's say, had news, there was a catalyst that was making it gap, chances are Verizon's following it, right? So if AT&T doesn't meet my requirements for my minimum ATR, then maybe Verizon does. So again, that's how I'm using my ATR to just qualify things for the day trade. But then once I'm into a trade, okay, one of my rules is, let me go back to, let's go like Roku. So one of my rules when I'm trading is that one of my rules is if I go to get into a trade and the stock has already moved to, it's hit a target, or it's already moved its average daily range, then I likely am not going to take that trade. And those of you who listen to Johnny, when Johnny is running the room, you'll hear him talk about average daily range an awful lot. And he's always looking at the average daily range, trying to determine, has the stock already moved its average daily range? And if it has, then chances are he's probably going to pass on it, right? Because if it's already made its move for the day, how much more are you, expecting it to move? So that's how I use the average daily. I have that up there. I know that the average daily range on Roku is 379. So like, for instance, on this day, right? So from just call it 380 just to keep it simple. So 67.44 up to, if I was, let's say I'm in a trade or looking at a trade and it's already made its average, it's already completed its average daily range, chances are I'm going to look for a different trade, because you're asking too much from the price at that point to make a bigger move. So these are just, again, so tips and tools. These are just scripts that you can add to your studies. So if I go into studies and I go edit studies, okay, that average true range and this ADR, this average daily range label, are just scripts that I've added in here. So you can see over here on my list of scripts here, the ones that have that little lock, I guess is what it is. Those are the ones that come with Thinkorswim. Okay, Chad, I'll get to that real quick. Okay. Well, and I'm kind of covering it right now. So hang with me. So the ones that have the locks are scripts that come with Thinkorswim. They're already built into it. These ones here that don't have the lock, you can see here that ATR underscore ADR. These are scripts that I have actually either built myself or I've pulled off the internet. I've added them to it. And so as you can see over here, like the average true range, right? If I go down to the average true range right here, you can see there's no lock on it. So that is one that I imported. Okay. So Chad, if I were to, so for instance, if I were to share this with you, okay, and you're asking how do you add it to your charts? So let's say, for instance, the ADR, okay, this one here, which is the ADR label, right? This one right here. If I right click on that, okay, and I click share, I can just name this ADR script, okay? And I'm going to click share. And that opened on a different screen, but give me 1 second. So that I right click that and I clicked share. Now, if I go over, I got to change screens real quick. So all I did was I'm back in my main screen. So here's this. This is the one that has all these charts here, right? When I clicked that, when I clicked share, it popped up over here on the main screen. That's why you can see it. But if I go to tools, that ADR script right here, okay, is right here. And here's the link for it, okay? So if I copy that, guess I gotta click over here, right? It's been copied. So Chad, in the chat right now, I am posting that. Okay, so there is that. There's that link. So Chad, can you just make you can see that right in the chat? Okay, so now all you would do if you wanted to import that right now, all you have to do is if you go into let me go back to charts. If you go into setup, right, and then you click open a shared item. Okay, so we're doing this in real time together. Okay, so if you go setup, open shared item, you're going to paste in that URL that I just gave you right there. You're going to preview it. And there's the ADR script. And I'm not going to do this because I already have it, but import item as, and you can name it whatever you want. Okay. So I've got it listed as ADR script. You call it whatever you want, click import, and that will automatically add it to your studies. So right now, if you go through those steps, you'll have it. And then all you have to do is go to all you have to do is go over here into your chart, right click anywhere on the chart, click studies, edit studies, go over here to where whatever you called it, ADR script or whatever ADR, whatever you called it, right? Doesn't have to be the same name as mine. Just double click it and then it will be added over here. And then when you click apply or okay, it's going to add it to the top there for you. Was anyone actually able to do that while we were doing this? I'm just curious if any. Perfect. Chad, did you actually get it on your chart? Trying to copy the URL. Okay. Yeah. So right here, you see the chat pane, right? select all. Oh, no, you don't want to do that. Just highlight it just like this and then copy. Boom. That's it. Just hover over the end of it like that. And as you can see, when I do this, it just highlights the whole thing. Right click it, copy. And then you should be able to, and then that URL is what you're importing into Thinkorswim. All right. Let's go back to, all right. So back here. So again, that's how I'm using the ATR and the ADR. So ATR, I'm really using pre-market to qualify any gaps that I'm looking at possibly trading for the day. And then ADR, I'm using as an intraday tool to see how much does that particular ticker, how much does that move on. That's the ADR is the average daily range. ATR is the average true range. So the ADR, average daily range, I'm comparing what it has done today to what it normally does on average. Okay. And that was, let me just check, that ADR is based on, so average true range is based on, okay, so that's, just want to check it. The average true range, see the 14 right there, that's based on 14 days. The ADR, I have it set so it's based on the previous 5 days. So just because there's, five, I'm thinking of 5 trading days in a week, right? So that just looking back 5 days to give me that ADR. So of course that will that will change, right? Based on how much the stock starts moving even more in a 5-day period or less, it will automatically change to reflect the previous 5 days. I'm curious, the average true range. I think let me go into the script real quick. I had, yeah, so I'm sorry, I'm just looking at the average true range. If it's, I'm gonna have to go back and double check. I should have been color coded for, yeah, so red if it was less than 20 cents. ATR low is red. ATR mid should be gray. Huh. Anyway, I'll look at that later on my own. It should be color coded. So this clearly meets my requirement, an ATR of 40. But what I noticed was when I was in I meant this T, thought that should be red based on, yeah, if it's less than 20, that should be red. I'm not sure why that's not showing up as, I've got red, gray, ATR low. All right. I just realized that should be coming up as red, and it should be gray if it's 50 to 80. For whatever reason, it's not picking up the color, but I'll mess around with that later. If I set the ATR to 5 days, would that be the same as ADR? Albert, is that ADR-5? Is that something that's showing up in TradingView maybe? Yeah, so ADR-5 is, yeah, I've got it set. So my ADR is based on a 5-day period. Hopefully that answered your question. I'm not sure if it did or not. Okay, so let's move on. So multi-time frame analysis. So that's how we, I guess the question is, what is the difference between ATR? Oh, so sorry. So average true range, okay, is average true range takes into account the like things like gaps and all that. So the average true range is figured over a 14-day period, and it just takes the average movement of the stock, but it includes gaps. Okay. And then the average daily range is how much on average it moves in a day. So I'm not sure if hopefully, okay. And you know what? And as a matter of fact, let me just pull this up real quick. If you want to, hang on a second. All right. I just posted in the chat there. There's a link. If you want to learn more about average true range and average daily range, go ahead and click this link right here. Okay. And that will walk you through what the difference is. And it gets into some technical stuff too. But it will go beyond just like a simple explanation, but it will give you the basics of, well, what's the difference between average true range and average daily range. All right. But again, just keep in mind the average true range takes into account things like gaps and that kind of movement, where average daily range is just taking the actual daily ranges, right? Not including a gap from a previous day, but just the candles themselves over those days and coming up with an average. So that's why when you look at something like, if we go here and we go back to, yeah, so Vom, in my both the ATR and the ADR are scripts that I have. I'll post, I'll give you the ATR one as well. So Roku here, right? You'll notice that there's a slight difference between the ATR and the ADR, right? And that's because it is factoring in the gaps. So I'll give you the ATR again. This is kind of bugging me because when I was on T a second ago, that should have been red. That should have been color coded red. And I'm not sure how that's gotten messed up but let me, I'll share it with you, but you might have to mess around with it. I'm not sure. Again, I'm not sure why it's not color coding it properly. Hang on one second. Oh, that's a Friday bug. Yeah, something. I'm not sure. I mean, when I looked at the hang on a second, tools. When I went in here, right? And if I go to edit, and so this is what the script looks like. Okay. When you're inside the script, this is the coding for it. Okay. So if anybody is technical and you know how to code, I mean, this is the code for it. So right here, it says, here's the labels. Okay. Green, if it's over 80 cents, gray, if it's 50 to 80, and then it should be red if it's less than 20. Oh, maybe that's why it was wasn't red, because it was less than 20, right? Maybe that's it, because the right here, less than 20. If I change that, I could change that to 50, then it would be red. That's why. I got it. Okay. I knew there was probably a simple explanation. So if it's less than 20, it's going to be red. But that really, I should bump that up to 50, because I've got the range here, greater than 80 here, 50 cents to 80 here, and this should be less than 50. So let's play around with this. You can see how you can work on the code yourself. So I just changed that to, that should be, if it's less than 50, it should be red. And then if there's less than 50, then it should globally pick up that color. Okay, so I'm gonna click OK, apply. So now when I go back to T, let's see if it did it. Boom, there you go. It's red now. Okay, I knew there was probably a simple explanation. Hang on, I'm gonna share that corrected one with you so that you have it. Okay, so that's the average true range. I'm going to share. Okay, average true range script. If I go to tools, copy. Okay, I'm pasting it in the chat. All right, so there's that script. Give me a 1 if that came through, if everyone can see that script. Okay, so there you go. So there's that script for that average true range. So again, if you want to go back here. So if you wanted to import that right now, just go to the end here, hold down your left clicker, highlight it, right click, click copy. Okay. Then go into your main section here, go ahead and set up. You would open shared item. I'm going to paste it in there, preview it, average true range script, and then you click import. Boom, you're done. Right? So there you go. So now you all have the average true range script, and you also have the average daily range script. So really good tools to have on your, now, again, I add those to my daily charts. Now, let me just make sure you understand. So if I go over here to, back to here, okay? If you notice, that's a daily, right? So that's a true reflection of the daily price action, right? So if I go to Roku, right? There, my ATR, the average daily range. Now, what I want to point out to you is that is cool, Vaughn, you're welcome. That's on the daily, right? But watch, if I change this, okay, to a 5-minute chart, notice how it changes, okay? Still, can that be helpful? It could be. So the average, now it's now adjusted based on the time frame. So now this is telling you on a 5-minute chart, okay, what the average true range is for 5 minutes and what the average daily range is. So I don't use it that way. I only use that when I'm looking at the daily, okay, because that's the most important thing for me, is knowing these numbers for the daily, okay? So back to using the multi-time frame analysis is I'll start off in the morning looking at this chart in the 5-minute with the pre-market and the daily. Now, once we are live, I will change these, okay? So on my computer at home, I've got a whole bunch of different screens or charts set up, but that will just do this automatically. But I'll start off in the morning when the market opens, I'll switch to a 3-minute I'll have one chart that's open that has a 3-minute pre-market on, 3-minute pre-market off, right? That's the 10 EMA strategy. That's the way you do it. 3-minute chart with pre-market on, 3-minute chart with pre-market off. Now, what I also have are split screens like this, where I'll have a 5-minute chart and a 15-minute chart. Okay. So what I'm looking for is, when I'm considering a trade, I will be looking at the 5-minute chart, the 15-minute chart. I want to see that things are that they're in alignment with each other. Okay. And then I will also do that with I will change this to a 30 and a 15. So again, with my computer at home, I have these already set up, so I don't have to go clicking and changing. I already have these charts where I can just, pull them up and look at them. But the multi-time frame analysis, the idea here is to make sure that when you're looking to get into a trade, that ideally you want to have all the higher time frames, everything in alignment. So what you're seeing on the small time frame is consistent with what the higher time frames are showing you. So the 15-minute, 30, and then I will also go into front to a look at a 30-minute and a 1 hour. Here I can turn off the pre-market on this. So if I'm looking into a trade and I'm considering a long or a short, let's just try to come up with see if we can come up with some type of a example here. So 1430, let's go back to a 3-minute chart here. Right. Well, 1430. So this, what I'm looking at is, if you were thinking about going long here, which you wouldn't based on this candle, the shooting star coming right off VWAP. But I was trying to come up with a good example where it might look like a long setup on the smaller chart, but once you go into the higher time frame, it clearly is not. Let me see if I can come up with a good example for you. Let's look at yesterday's price action. All right, so 1430 yesterday. All right, there you go. Okay, so let's say yesterday, if you were trading, and on the 3-minute chart, now let's say you're not using the 10 EMA strategy, but you see this hammer candle at 1424, right? And $14.24, and then this is, you get this candle here, right? And you're thinking about going, well, that maybe this is a long, but then when you come over here and you see on the higher time frame what it looks like, well, this doesn't look like a long, right? So smaller time frame, yeah, you might be thinking go long here, right? Because it had made a high, it pulled back, and then you throw in this you get this hammer candle, and then you're possibly thinking, well, maybe it's going to go back up to the highs. But then when you look over at the higher time frame, this clearly doesn't look bullish, right? So Chad, yeah, no worries. Give me 1 second. I have it here. ADR script. I'll give you both, Chad. I'm not sure if you lost both of them. So this is the ADR script. That's the ADR script. And let me give you the average true range script, just in case you didn't get that one. All right. So there, Chad, I just shared both of those with you in case you didn't get both. Okay. So again, when I'm looking at the smaller time frame and I'm considering a trade, again, I always go to a higher time frame and I want to see if it looks like again, 15-minute chart, 1430, which would have been here, right? So 15-minute didn't look so bad. That looked like, well, maybe you could go long, right? But anyway, that's how I use the multi-time frame. Is I want to make sure that the higher time frames are supporting my thesis with the smaller time frame. So if I see a trade set up in a smaller time frame, if I go to the higher time frame and they're not in alignment, then I know not to take the trade. Sorry, I'm just crossing off topics. Chad, you're welcome if I didn't already say that. Okay. Volume profile. So I know that you hear a lot of the moderators talking about it. You know, I've been using volume profile for years, right? And that's what all this is right here. The blue. It might look a little bit different on my chart than it does on yours, but volume profile, I find it hugely helpful. Higher time frames, again, using the multi-time frame analysis, I want to the volume profile on the daily chart, obviously going to be more reliable than the volume profile on a 3-minute chart or a 5-minute chart. So I do use the volume profile, but I will defer to the higher time frame charts to try to find those. And I'm using the volume profile to help me identify support resistance levels. Okay, so the simple way that I explain volume profile, I know that Tracy has her master's course on it, but a very simple way to think about volume profile is if I zoom in here, right? So the farther that these bars stick out, that is an indication of the greater the amount of volume that went off. So the farther that these extend out, I think of them as like branches of a tree. Okay, so if you were falling through space and you came upon a tree, like branches that stick out really far would help to break your fall and slow you down, right? But branches that are not, branches that are short, that you're not even going to touch them. You're just going to keep falling. And that's kind of how I look at this. So the farther that the volume profile extends out, the stronger the support and or resistance is going to be. Okay. And so, and again, I will look at I have it on the volume profile, I have it on all time frames, but I'm going to look more at the higher time frame volume profile to try to find really key levels of support resistance. Okay. And as you can see here, right, just looking at today, you can tell that, here's the day close, right? But here's this red area here is the point of control. But you can see how all through today, this was a battleground right here. Okay, so this is a 30-minute chart. And you can see that this big, huge bullish candle came up. It hit this level here, and just see how, like, if you just drop a line in here, right, you can see that this level here truly was a key level, a level where the bears were trying to prevent the bulls from getting past. Okay, so the bulls, you can see here, big strong candle, right? 30 minutes, strong bullish candle, good volume. It gets up to this level. Now the battle begins, and the bulls have to try to push through that level and take it higher. Well, the bears, and we're only looking at today, but I'm going to expand this in a second. My guess is if we go back in time, we look, this is probably an area where the bears had pushed price down through, and now they're trying to keep the bulls from getting back above it. Okay. And you can see here that it pushed up here and then got rejected, came back down, came back up here, tried to push above it. Here it actually did get back above it, but you notice how it closed back below that line and then they pushed it back down again. So if we, let's maximize the sell. Let's just look back. Let's extend this line to the left. And yeah, so here you can see it again over on this day here. Now we're talking, several days in the past, right? This was clearly an area where that battleground took place previously. Right? You can see here that this line that I just extended over from today here was providing support. Then it got below it, and look at all these times it tried to get above it, and it was resistance. The bears were trying to keep it down. Bulls finally got up on, above that line, trying to push it higher, right? And you can see all this volume that was going off here. So there was very strong battleground all through here. And again, I kind of look at, it's not one level, it's kind of a zone, right? You can see the branches, right? I refer to them as branches. These are short, but look how far this one extends out. Point of control is always going to be the farthest one, but you can see that this zone, again, I consider this volume area. If I can get this to, so that area that I just highlighted is the zone where this battle was taking place. And then what happened was, well, the next day, price gap down, right? So price gap down, now we're back down below that line. So the bears are going to want to keep price below this line. That was clearly a key battleground here. So the bears want to keep price below this level. And then what happens is yesterday, right, pushes up, closes above it. Now you look here, right? Bears clearly right here. Bears tried to push price back down, got back down to that level, and the bulls stepped in and wouldn't let it happen. All right, Kyle, have a great one. So price stayed up here, and then when it came back down to that level again, now the bulls have to prevent the bears from taking it back down, but they try, right? You get this high wave candle, then you get this doji here, and then finally, the bulls gave up, or the bears overpowered them, push price down below that level. So again, this is a 30-minute chart. So I will go and I will look at this 30-minute chart to try to get an idea of what direction I should be going on in the smaller time frame. And you can do that on the 30-minute. Again, I look at the 5-minute, the 15-minute, 30-minute, and the 1 hour. Okay, so those are, and you can also look at the 4 hour too. But those are the primary ones that I look at, the 5, 15, 30, 1 hour. Sometimes I will get into the 4 hour, but 4 hour, these are mainly for the timeframes I'm looking at when I'm day trading. The 4 hour chart I might look for in terms of swing trading. All right, so moving on, other tools that will help you with your trading. Creating OCO brackets. I'm just going to, I don't have a visual to show you on this, but well, I kind of already did when I showed you the risk calculator, because on that risk calculator, when you build that order, it is automatically putting in your entry, your stop, and your target. And I can't emphasize enough the importance of, when you place an order, having all those components in place. Now, I'm not throwing Johnny under the bus here, okay? But it was funny because remember, he was any of you who were in the room with him today, and he was talking, he's like he thought he should have gotten stopped out of a trade, and it didn't happen. He's like, what happened? And then he goes in and goes, oh my gosh, I never put my stop in. So but Johnny's been trading a long time. But you know, so he is a very skilled and experienced trader. So, but for anybody who's newer to trading, I would greatly recommend that you do not enter a trade without putting in your entry, your stop, and your target, creating that OCO bracket, okay, which one stands for one cancels another. So once you get triggered into that trade, your stop and your target are already in play. You don't have to go and do anything. They're already in place because you did that order all at once. So just a tip and something I highly encourage, which is when you enter an order, use the OCO order or OCO bracket, whatever you want to call it, put in your entry, your stop, your target. And once you get triggered in that trade, you already have your stop and your profit target already as a bracket. So whichever one gets hit first will cancel the other one. That's that cancel part of that OCO bracket. One cancels another. So if your stop is hit, it's going to cancel out your order that you had for a profit target, or if your profit target is hit, it's going to cancel your order for the stop. Very simple. You can manually go in and adjust those numbers, right? So once you're in it, and that's why I set the example I was giving with the risk calculator, why I set a 3R target is I can just go in and adjust that target, right? But why not just, I can throw in a 3R target to start off with, but I can always go in and manually adjust it. I'm not married to or locked into that target, but it is part of my order and it will automatically get generated as and it will be connected to my stop. Let's see, got 5 more minutes. And I don't know that we covered all 9, but we've got a lot of stuff in here. So I'm going to run through the rest of my, the notes I made here. Journaling. Okay. So highly encourage people to journal the trades, track their trades, put your trades into some type of a trading journal, whatever that might be. Okay, cool. Robert. Awesome. Appreciate it. Yeah, I'm just going to run through this list real quick, but journal your trades. I'm going to throw in a website right real quick. Hang on one second. Let me pull it up here real quick. Just going to share this with the group here in the chat. That's a link to a website called TraderView. And TraderView, they have a free version and a paid version, but you can sign up for a free version. You can enter your trades in there. You can get a lot of analytics. If you do the paid version, you can actually connect it to your broker and import trades that way, but you can run all kinds of really interesting analytics on your trade. Times of day, the type of trade, all kinds of different things, but it's a really nice tool. If anybody isn't using it, I highly encourage you to look at it. Again, they do have a free version. Okay. Mike says trading very concise. Is there a resource for setting up MetaTrader to your 8cap account? Yeah. So Mike, when you connecting your MetaTrader to the 8cap, just go. I found a bunch of videos on YouTube. Okay, so if you just go to YouTube and put in connect 8cap to MetaTrader 5, you'll see it. So and also there's some really good videos on the risk calculator as well. So just go into YouTube and just search on those. You'll find plenty of videos. That's actually, well, Brandon helped me set it up when we were in Croatia, but I actually did find a bunch of helpful videos on YouTube. Let's see, let me just go through in the last 2 minutes. Okay, that spreadsheet is nice too. Yep. And again, Mike, if you want a copy of that spreadsheet, just email me, Steven@reallifetrading.com. I will get that off to you. Couple more things in the last 2 minutes. Become a specialist. Okay. So find the trading style that fits your personality, right? We are all different. We all have different personalities, we have risk tolerances that are different from each other. Find that style of trading that fits your personality and then become a specialist. So whether that's scalping, whether that's swing trading, day trading, whatever it might be, find that thing that fits your personality, that fits you and your risk tolerance. Because again, we're all different. Become a specialist in that. And the market, Jeremy always says, the market rewards the specialist. So become a specialist in whatever trading style that best suits you. Do your back trading. Spend lots of time back trading and analyzing your trades. That's part of that ties in with the journaling. If you journal your trades and put down detailed notes about what you were looking at and what you were thinking, it's going to help you when you go back and you back trade that, because you're going to learn from your mistakes, most importantly. Let's see. I think I'm just, last thing, I got one more minute. I'm within the final minute of this presentation. Last thing, and maybe could have started with this, but follow a daily routine and have a plan, right? Shouldn't be trading if you don't have a trading plan. You got to have a trading plan, but along with that trading plan is you should have a daily routine that you follow every day. It just helps to keep you focused on what you're doing. And that trading plan is a huge part of your daily routine. All right, 5 o'clock. I'm going to stop my share. I've got Robert Thompson. Where are you, Robert? Are you signed in as you need to promote me? Okay, hang on one second. Let me find you in the participants. There you are. Promote to panelist. There you go. You are promoted.
Cool. Can you make me the host, and then I'll get it. I'll get the recording going. And
You got it. Yep. Make host.